We are covering these 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on UAL. United Airlines Holdings Incorporated, one of the major players in the global airline industry, operates flights across 6 continents, connecting passengers to over 350 destinations worldwide. They're known for their extensive hub-and-spoke system, with major hubs in cities like Chicago, San Francisco, and Newark. This system allows United to efficiently move a large volume of passengers and cargo, including freight and mail services. Recently, United Airlines was caught in a significant disruption when a power outage hit London's Heathrow Airport, causing widespread flight cancellations and diversions. The fallout from this could lead to major losses for the airline, with estimates suggesting airlines could face anywhere from $80 to $100 million in lost revenue from rerouting flights, providing accommodations, and rescheduling operations. United, along with other carriers, has been working hard to mitigate the impact and get flights back on track, but the scale of the disruption underscores how vulnerable the airline industry is to unforeseen events. While United is generally well-equipped to handle such disruptions due to its broad network and strong partnerships with regional carriers, the event highlights an ongoing challenge for investors. Airlines, no matter how large, can face significant setbacks when major hubs like Heathrow are affected. Still, United's ability to adapt quickly and utilize its network of alliances should help them bounce back, though the short-term losses could still affect their performance. As an investor, keeping an eye on these disruptions and the company's response strategies will be important in understanding its ability to weather these types of challenges. Our review on GPRE, Green Plains Incorporated, is all about turning renewable crops into sustainable ingredients, focusing on biofuels and other green solutions. They've got a strong hold in the biofuel game, producing ethanol, distillers' grains, and renewable corn oil at their biorefineries spread across the U.S. They're also making a mark in the animal and aquaculture industries with some innovative ingredients. So, when it comes to clean energy, Green Plains is in a pretty good spot to benefit from the growing push toward more sustainable, low-carbon solutions. Lately, the company's stock has been getting some attention, and that's likely due to the rising demand for green biofuels. As more people look for alternatives to traditional energy, companies like Green Plains that specialize in biofuels are in the sweet spot. The company's solid operations and diverse offerings make an attractive option, especially as governments focus more on reducing carbon emissions. That said, there are always a few hurdles. Green Plains has to deal with things like fluctuating grain prices and changing regulations, which can shake things up. But with its strong infrastructure and the world leaning more into clean energy, Green Plains has some serious potential. For investors, it's worth keeping an eye on how things play out in the biofuel sector as demand keeps picking up. Our review on ZI. ZoomInfo Technologies Incorporated is all about helping sales and marketing teams find the right people and companies to target. They've built a cloud-based platform that gives businesses access to a ton of accurate, up-to-date information on organizations and professionals. This means companies can make smarter decisions when reaching out to potential clients, building strategies, or even recruiting talent. Their platform uses AI and machine learning to sift through huge amounts of data, ensuring it's all clean and reliable. Recently, ZoomInfo has been making a bigger impact, and that's showing in its stock performance. As businesses continue to lean on data to drive decisions, platforms like ZoomInfo are becoming essential tools. The demand for real-time, actionable intelligence has skyrocketed, and that bodes well for the company's future. But it's not all smooth sailing. The market is competitive, and ZoomInfo has some heavy hitters to compete with. Plus, tech moves fast, so the company will need to keep innovating to stay ahead. Still, with how integrated ZoomInfo is in the day-to-day operations of so many companies, it's clear they're in a strong position. If you're an investor, ZoomInfo's growth potential looks solid, especially with the ongoing shift toward data-driven decision-making. It's definitely a stock to keep an eye on. Our review on RBLX. Roblox Corporation is all about creating a space where people can connect, create, and experience the virtual world through its platform. It's not just about playing games. It's a platform where developers build immersive experiences and users can explore them in a 3D world. The cool thing about Roblox is how it blends play, work, and learning into one community-driven space. Developers use Roblox Studio to create their own worlds, and players jump in to experience them, all while socializing with others in real time. Now, let's talk about the big buzz around Roblox lately. It's being hailed as a free cash flow powerhouse in the gaming world. That's a big deal, right? This means the company's got solid revenue generation and efficient operations, which is something investors love to see. Roblox's ability to generate consistent cash flow, especially given how massive and growing its user base is what's really starting to stand out. More creators are joining the platform, more people are getting hooked, and the virtual economy they've built is just flourishing. But, of course, there's a balancing act. While Roblox has this incredible user engagement and growth on its side, there's always the question of whether it can keep that momentum going and continue innovating. The competition in gaming is fierce, and trends can shift quickly, so Roblox has to stay ahead of the curve. For investors, Roblox looks pretty strong right now. The platform's not only been expanding its user base, but also developing a sustainable cash flow that many other gaming companies struggle to match. So, if you're watching this stock, it's definitely got some exciting growth potential in the coming years, especially if the metaverse and virtual worlds keep growing the way they are. Our review on DNB. Dun & Bradstreet Holdings Incorporated has long been a go-to player in the business data and analytics world, providing critical decisioning tools for everything from credit decisions to sales and marketing strategies. Their platform essentially helps businesses make smarter choices by providing curated data and insights that keep companies ahead of the game. Whether it's helping finance teams assess risk or sales teams zero in on the right prospects, their offerings are built into the daily operations of businesses around the world. Now, the latest buzz surrounding Dun & Bradstreet is that it's nearing a deal to go private. According to reports, Clearlake Capital is close to acquiring the company for around $9 per share, which would value the whole deal at about $4 billion. For investors, this is a pretty significant development. The stock has been nudging up, seeing a 2% bump following the news. It's a classic scenario of a company being scooped up at a premium, with that $9 per share being a nice little bump from where it's currently sitting around $8.70. But there's a catch. This deal could still be subject to changes. Dun & Bradstreet is expected to have a go-shop period, meaning they can still entertain other offers during the process. That could mean more twists and turns before anything final is locked in. For investors, this is one of those moments where you might be watching closely to see how things unfold. The deal could offer some immediate upside, but the possibility of rival offers or new negotiations could mean some uncertainty for the stock in the short term. Still, with Clearlake Capital eyeing the company, it's a clear signal that Dun & Bradstreet's position in the data and analytics space is seen as valuable and poised for potential growth under new ownership. So, if you got your eye on this one, there could be some interesting opportunities ahead, especially if you're in for a potential exit at that $9 price tag. Our review on TFX. Teleflex Incorporated is a big player in the medical tech world, offering a range of essential products for hospitals and healthcare providers. From anesthesia and emergency medicine to interventional cardiology and urology, they've got a solid portfolio of single-use medical devices that are crucial for both diagnostic and therapeutic procedures. They operate globally, with a presence in the Americas, EMEA, and Asia, and their products are often used in critical care and surgical settings. Whether it's their Aero-branded catheters or devices like the Manta vascular closure, Teleflex is all about making procedures safer and more effective. Now, when it comes to stock performance, recent developments have investors watching closely. The medical tech sector has been under pressure recently, and Teleflex is no exception. But it's important to remember that they have a diversified product range that helps them weather some of these challenges. For instance, Their vascular access products and interventional tools are crucial in areas like emergency care and surgeries, which are always in demand, even in tough times. So, while the broader market may be unpredictable, Teleflex's strong footing in critical care and surgical applications gives it a degree of stability. Their focus on high-quality, single-use products also means they're well-positioned to handle both short-term pressures and long-term growth. If you're an investor, keeping an eye on how their global operations are evolving, especially in key regions like the Americas and EMEA, could provide some valuable insights as you decide how to position yourself in the stock. Our review on FUBO. FuboTV Incorporated is continuing to carve out its niche as a sports-first live TV streaming service, offering access to tens of thousands of live sporting events along with news and entertainment content. The platform makes it easy for customers to access all this through streaming devices, smart TVs, mobile phones, tablets, and computers. They've got a solid lineup with over 100 channels, including top sports networks, and they give subscribers the flexibility to add premium channels, additional storage, and even stream multiple games at once. Now, let's talk about the latest news. FuboTV has just struck an agreement to bring the Texas Rangers broadcast network to its platform. Starting now, fans in Texas and surrounding states like Arkansas, Louisiana, and Oklahoma can watch every available Rangers game, plus pre- and post-game shows, through FuboTV's English-language plans. This is a big move, and it could really boost subscriber numbers in those regions. As more sports content like this gets locked in, FuboTV could become a more compelling option for sports fans looking to cut the cord. For investors, this partnership is a sign that FuboTV is continuing to strengthen its position in the sports streaming market, which is crucial for its long-term growth. More exclusive sports deals like this could drive subscriber growth, especially in local markets where fans are loyal to their teams. It's definitely something to keep an eye on as the company continues to expand its offerings and solidify its brand in the sports streaming space. Please subscribe, give the video a like, and watch more from our playlist. Thanks.